All right. Hello, everyone, and thank you all for joining us during the Lytham Partners Fall 2023 Investor Conference. My name is Robert Blum, Managing Partner of Lytham Partners. During this webcast, we welcome Zomedica, ticker symbol of ZOM on the NYSE American. And joining us today from the company is its Chief Executive Officer, Larry Heaton. Before I turn the floor over to Larry to run through the company slide presentation, I want to remind everyone that management is available for one-on-one meetings later today. If you've not already signed up for a one-on-one and would like to do so, shoot me an email. That's Blum, B-L-U-M, at lythampartners.com, or visit our website, lythampartners.com/virtual. Click on the one-on-one meeting request button, and we will look to get you taken care of. So with that said, Larry, the floor is all yours.
Thank you, Robert. Appreciate the opportunity to present to your investors today and to our shareholders at home who may be looking at this via webcast. As always, we continue to appreciate your support. As Robert mentioned, I'm the Chief Executive Officer of Zomedica, where we are about the business of improving the lives of pets and the vets that take care of them. I encourage you to review the safe harbor statement at your convenience. At Zomedica, we compete in the animal health industry, a very large industry, very large market that is showing to be resistant to any kind of economic downturn. Into this marketplace, we offer innovative technology to both improve the quality of care for pets, but also very importantly, to improve the practice economics for vets. To do this, we've built an experienced management team over the last couple of years, who are really focused on executing our plans for both organic growth and growth by acquisition. As an example of that execution, we're producing margins in the first half of the year, which is the last we can comment on until we do our earnings on November 13. We're 70% gross margins through the first half of the year, and we expect to continue that as we move forward. While we have grown primarily over the last 2 years through acquisition, we also have been growing organically over the last year. And we're probably proudest of the fact that once we acquire a company, we're able to generate increased interest and increased, most importantly, revenue, while bringing the manufacturing and the distribution in-house to bring margins up and COGS down. To accomplish this in the future, we still have a substantial cash balance, cash and equivalents. As of the end of second quarter, we had 142 million. I will note that we've made a couple of acquisitions since then, which we've reported publicly, and so that cash number will be coming down a bit. But the cash burn is still remaining modest at around $3 million a quarter. We have essentially no debt other than lease obligations. Whereas 2 years ago, our total revenue was just shy of about $50,000. Today, with one product line, today we have 5 product lines on the market, addressing an annual recurring market that totals overall $2.5 billion. So we're going after a very large market, and we're doing pretty well doing it, generating strong margins and on a pathway to profitability. A bit about the market. The animal health market, vet service market's huge, right? Should be over $100 billion this year, 60 billion plus in the United States alone. And in the segments that we participate in, which are therapeutic devices and point-of-care diagnostics, point-of-care diagnostics is the fastest growing segment. And there's some reasons for that, which we'll chat about in a minute. It's been a large market for a while, and then during the pandemic, it really took off. 23 million kittens and puppies were brought into households during the pandemic. So an already large market got a very big boost. And the boost in this market is not just a pet that you're going to put outside, but rather a member of the family. Pet owners really regard the pet as part of the family. And as it turns out, there are a lot of things that they would give up before they would not take their sick or injured pet to the veterinarian, which means that it is resistant to economic downturns. This is a market that is large, growing, and has legs. Now, that's good news for investors in animal health and for us, but for vets, it's been a bit of a mixed message. See, veterinarians were already struggling from a financial standpoint before the pandemic. all of the heartworm and flea and tick and fancy food and other drugs typically were purchased from the veterinarian, who marked them up and made a margin. They made an income, not like in the human health market. But now people buy those from Chewy and Pet Wishes and Amazon and so on. And so that has left a gap. Even before the pandemic, that left a gap in income for vets that they needed to fill. And that's one of the reasons why they have looked to and made point of care diagnostics one of the fastest growing segments within that overall market. So you have veterinarians who were busy before, a shortage of them. For every vet looking for a position, there's 16 openings. There's a shortage of them before the pandemic, and now the pandemic hits, 23 million more pets get added. They got shut down for COVID. They open back up a little haphazardly. Their staff leaves, their staff doesn't all come back. And like many other businesses in the United States, staffing has become the #1 issue for veterinarians. They needed even more staff to handle the more customers that are coming to their clinics. And yet it's tough for them to compete for that staff because McDonald's down the street is paying $18 an hour. And so staffing the #1 issue, which makes then workflow a very important part of the veterinarian's life in terms of running their practice. And not all of them have stuck it out. 40% of them have sold to corporate groups. It's good for us because that's a B2B sale. But if they want to remain independent, they need to not only focus on what they love to do, which is to take care of the pets, but what they need to do, which is to take care of the economics of the business. And so it's into that sort of paradigm that our mission is to bring innovative diagnostic and therapeutic technology to vets to improve the quality of care for the pet, the satisfaction of the pet parent, yes, but also to improve the workflow, the cash flow, and profitability of the practice. To do that, as I mentioned, we have assembled a very experienced veteran team that are working closely together to be able to bring these benefits to veterinarians across the country and really across the world. We've grown primarily through acquisitions. We started in 2021 with the TrueForma product line. Total revenue that year prior to our first acquisition was about $50,000. Our first acquisition was PulseVet, which we acquired in October of 21, and that allowed us to enter the shockwave market. Subsequently, we've acquired Revo for the TrueView microscope, the Assisi Animal Health for the Assisi Loop products, and SMP for the VetGuardian wireless monitoring. Throughout this, what we focused on is the recurring revenue that each of these acquisitions and the products that they brought can bring to the company. Each of our products has a recurring revenue component, and we now, as we look at the market opportunity ahead of us on an annual basis, it adds up to $2.5 billion. It breaks out by product. Each of the products, whether it's PulseVet, which we sell on a recurring revenue basis, the Trodes for $2,000 each, the Assisi Loops, which are about $300 each, the TrueForma device, which has been assays which sell from either $30 up to $80. Each of these products produce recurring revenue, and that's really our main focus. In addition, there's a capital revenue component. We sell the PulseVet systems for $30,000, the first Trodes 2, and the VetGuardian system is also a capital sale at $4,500 per system. So along the way to generating the recurring revenue, there's a great opportunity for capital revenue as well. The products break down into roughly 2 segments: therapeutic devices and diagnostics. Diagnostics include the laboratory blood analyzer diagnostic TrueForma platform, the TrueView digital cytology platform for imaging, and the VetGuardian product for wireless monitoring of pets. And on the therapeutic side, we feature the shockwave therapy, which has become the standard of care in equine medicine, and we're bringing it into small animal market now, as well as the Assisi Loop products, which come in various forms. All of these products that produce data are all brought together on our Zomedica web portal. This is where they go to see the images from the microscope, the data from the laboratory test, or the monitoring tracings. In each case, these are available. All of that data goes to the cloud where we own it, and then we send it back down to the browser for the individual veterinarian or the clinic or the iPhone or the iPad or what have you. And they're able to access all of the data on all of the pets on from all of the instrumentation that we have provided. Now, we've been doing pretty well with this. As I mentioned, in 2021, our revenue was nominal until our first acquisition. So in 2021, we did about $4 million total. In 2022, last year, we did just shy of 19 million. And this year we've done, we're trending at, about $6 million a quarter as we move forward. We'll be reporting earnings on November 13th. We're looking forward to that. And you'll see a continuation of the trend. Most of this revenue is in the United States, although we do have about 20 to 25% of our PulseVet and Assisi revenue coming outside the US currently. And we are planning on launching the TrueForma, TrueView, and VetGuardian products into the international markets in 2024. So we see a significant opportunity for growth. We're really at an inflection point in terms of that international business. We're growing organically. Our PulseVet and Assisi revenue have demonstrated substantial growth year over year, and also, of course, through acquisition. And we're growing on both sides of the segments, whether it's diagnostic revenue, which is up a higher percentage, but off of a lower base, or the substantial increase in therapeutic revenue, which is at a very decent base to begin with. We're not done. We continue to look for opportunities to add product lines to accomplish the things that we want to accomplish with veterinarians. Of course, when we look at companies or businesses or product lines, we're looking for those that are commercial stage or about to be, with significant growth opportunities, good margins, and would be accretive to earnings. In the first phase of our acquisitions, we were also looking to build infrastructure and a product launch cadence, which we have done. And now we're looking for things that will accelerate our pathway to profitability. But all of the products, if they meet those filters, also need to support the 5 pillars: improve the quality of care for the pet, the satisfaction of the pet parent, and then improve the workflow, the cash flow, and the profitability of the practice. The first product that we began selling was the TrueForma product platform, which consists of an analyzer that has been developed by the Qorvo Biotechnologies subsidiary of Qorvo. Qorvo had developed the bulk acoustic wave sensor technology and protected it with substantial patents, and allowed us to be the exclusive supplier of the TrueForma platform utilizing this sensor technology. And then they also had a human health side of the business, Qorvo Biotechnologies did, in which they were selling products for COVID testing for humans under an FDA emergency use authorization. Late breaking news, hasn't even made the slide yet. Earlier this month, on the first couple of days of October, Zomedica acquired Qorvo Biotechnologies LLC from the parent company Qorvo. And so we now own the business. We've taken over the manufacturing facility and the R&D facility in Plymouth, Minnesota. We had previously been planning on building a manufacturing site down in Georgia at our current facility there and doing R&D in Ann Arbor. But having acquired Qorvo Biotechnologies LLC, we're now able to use the existing staff and the existing folks, and that should accelerate our plans. Now, the business model here is the platform is the device. We actually provide that to veterinarians at no charge, as long as they're buying the cartridges. And then the cartridges are how we make our money. The technology that this uses allows us to uniquely do certain assays or certain tests. It's because it has a dynamic range that extends far below what other point-of-care diagnostics are able to provide. That being the case, we're able to offer assays that no one else can, whether it's quantitative cortisol or endogenous ACTH, many different ones. All but one of them are totally unique to our platform. The growth model here is to expand the installed base and also expand at the same time the menu of assays that are available. And that's a big reason why we began moving to doing our own R&D development as opposed to relying on a third party to do it, so that we could accelerate the development and launch of these new assays. This year, we have a couple that we have launched. We launched an endogenous ACTH earlier this year for small animals, and now we've recently launched it for equine. This is a great opportunity for us, as it has a very substantial market of horses that are of a certain age, horses over the age of 13, donkeys, ponies, and Morgan horses, or short horses. These horses all are susceptible to a disease called PPID. PPID can lead to laminitis, which can lead to them having to be put down. It's the way that you diagnose it is with EACTH. Up until now, you have to draw the blood, refrigerate it, and then send it cold to a university setting who will get your result back within a week. We have the first and only endogenous ACTH assay that can be performed not only in the clinic, but also stall side. And so this allows us for not only to do the diagnosis of the 70% of PPID horses that show signs. So they see something and say, oh, might have PPID, let's do a test, but also can be used to screen all horses of a certain age, because 30% of these horses never show signs until they develop laminitis. There's about 5 million horses over the age of 13 in the United States, and we see that this could become a screen for Cushing's or PPID disease. It's also called equine Cushing's. And so we have very high expectations for growth in this market segment, which incidentally, we already have relationships with due to our PulseVet product line. In addition, in the next products that we'll be launching for small animals will be tests for non-infectious GI disease, cobalamin, folate, and CPL. These are tests that the veterinarian would like to do when the dog is brought in with vomiting or diarrhea for a couple of days. And very good, very big advantage, very big benefit to being able to do the test at the point of care. But today, there are no point of care diagnostic devices that can do these tests. They all have to be sent off. And even if they get the test results back the next day, which they often will, still, it's a benefit to be able to do these while the pet is still in the clinic, so that they can go ahead and get the appropriate treatment plan. As we move forward, far right side, lots of additional opportunities for us to continue to develop assays. We have, as I mentioned, high expectations for this product line, especially now that we've acquired the company and expect to be able to accelerate it across the board. Our TruView digital cytology platform is an electronic microscope. It's an all-in-one unit, and it not only provides the absolute best image available in animal health because of the unique liquid lens technology that it incorporates, but it also is the only system that automatically makes the slide for the user. So unlike manually, where you have to put the blood on the slide, then you have to fix it, then you have to stain it, wash it, dry it, and then put it in the microscope, 5 to 10 minute process. With our microscope, you simply put the blood on the slide, you put the slide in the machine, and 6 to 12 minutes later, you're going to get an image. And if you're happy with that image, providing you with everything you need to know, great, you're done. But if you would like to have a pathologist report, you push a button, and within 2 hours, you'll get a board-certified pathologist report on that image. We just recently launched this product, and our model here is that we provide 2 veterinarians on a monthly subscription basis, and then charge $75, which is industry standard for those pathology reports. We see a huge market opportunity here, and we look forward to seeing this used in many vet practices in the United States and in next year outside the US as well. Our VetGuardian product was developed by a company called SMP, which we acquired in September. This product provides for totally wireless, no-touch monitoring of the vital signs of pets, which is important because they're at risk. 70% of the time a pet dies in the clinic, not associated with euthanasia. It's in post-op recovery. Now, vets are short-staffed, and even if they did have someone they could just sit and watch the pet, they don't have X-ray vision. But this device kind of does. It utilizes a Doppler radar with some LiDAR sensors. It uses a regular video camera, a thermal imaging camera, to be able to continuously get temperature, pulse, and respiration. And if any of those metrics, and then all those metrics are displayed up to the cloud, back down to my Zomedica. Maybe it's on a big board in the vet's office, or maybe it's on their iPad or their phone. But regardless, they don't have to keep watching those metrics either, because they don't have the time. If any of them go above or below a safe range, the device itself will alarm, the monitoring screen will alarm, and a text message or email will be sent for those cases where the vet's at home. It's overnight. This is a product that we launched earlier this year. We launched it in a limited way to our direct sales force, and then we began just this most recent quarter deploying it through distribution, animal health distributors here in the U.S. Shifting gears to therapeutics, our PulseVet product generates the bulk of our revenue today, and it is a system that produces a shockwave that, once the shockwave hits the tissue, it catalyzes the body to begin regenerative techniques or activities. So technically what it does is it upregulates cytokine production, which in turn increases bone morphogenic protein, increases blood flow, and increases neural growth. All of these things are proven and documented in a bunch of clinical data, 14 studies overall, 2 randomized controlled trials, all demonstrating significant success. It started in the equine market. It's become standard of care in equine sports and rehab medicine. And now we've acquired it. We began introducing it into the small animal market because of an accessory handpiece that we developed, or PulseVet had developed just before we acquired them, which made it applicable to small animals without the need for sedation. We sell the system for $30,000, and each handpiece goes for $2,000. Needs to be replaced every 50 to 75 treatments for another $2,000. So there's a substantial recurring revenue opportunity here for us. As a reflection of just how that shakes out, about 60% of our revenue comes from the refurbishments. And so you can see that increase in the installed base, which we have increased by 50% over the last 2 years. Increase in the installed base also then in turn increases the recurring revenue on a go-forward basis. The Assisi product line consists of the Assisi Loop, which is a targeted pulsed electromagnetic field therapy, which increases endothelial nitric oxide production, which in turn increases blood flow and decreases inflammation. This product is a disposable product. We sell it in the form of a loop. We sell it to veterinarians for $200. They sell it to pet parents for $300. It lasts for at least 150 treatments. After that point, the battery dies and the device needs to be repurchased. They can go back to the vet, or they can go online to Chewy, Pet Wishes, Amazon, a number of online e-tailers, or our own web store. But in any event, we'll never undercut the veterinarian's price. They can also go right back to the vet and get a replacement there. So this is a product that we acquired in part for their infrastructure, in part for their various channels, and in part for the existing vet customers. This is a product with PulseVet, which we just saw. That's something that the vet uses in the clinic. This is something that is sent home with the pet parent to include them in that continuum of care. And so there's a lot of synergies here. So that existing customer base was important to us as we were able to leverage entrees for the PulseVet system. From a financial standpoint, we're pretty happy with how we ended up the first half of the year. As I mentioned, we're looking forward to announcing earnings on the 13th of November, up 44% year over year, on top of a year that was up 346% on the previous year. Our margins are staying strong for the first half, around 70%. If you adjust out certain one-time things, then it's higher than that, but we're happy with 70%. And an EBITDA basis, you have the same story. While we have, we have relatively high operating expense, I'll point out that of those expenses, of the 11 million in OpEx reported GAAP reporting in the first half, a little bit more than half of that, right around half of that, was related to non-cash things like non-cash stock comp, D&A, things like that. So that when you bring it down to a adjusted EBITDA basis, you're looking at a loss of about 6 million, which is something that we expect over the next year and a half to completely obliterate in terms of a loss, and go not only cash flow positive next year, but get to actual GAAP profitability not long after that. As of the end of last quarter, second quarter, we had 142 million. I will point out that we have spent some cash on companies that we've acquired since then, and so we'll be reporting a new cash number here shortly. So at the end of the day, we are a company that has demonstrated ability to identify, diligence, acquire, and integrate companies. We still have a substantial war chest to be able to continue to do that. In addition, we've demonstrated that we were able to grow our products organically, and so we now have 5 paths to profitability. We don't need all of our products to be super successful for us to be very successful, but we have no reason to believe that they won't all be super successful, and that's our execution play, is to be able to go forward on all fronts at the same time. With substantial gross margins and substantial liquidity and a good track record, our share price, this is a hypothetical 20 cents, as we're trading below that just now, but our market cap seems to be undervalued in our opinion. But of course, it's not our opinion that's going to drive that price. It's the perceived value of the company by the shareholders. So we would encourage you to take a look, and we'll keep doing what we're doing, which is building a company the old-fashioned way, introducing new technology into the market, building new markets, manufacturing with great margins, and continuing to grow. And with that, Robert, I'll turn it back to you, see if there's any questions.
Yeah, thank you for that, Larry. Very comprehensive presentation there. I think we just sort of have time maybe for one topic here. Maybe just expand on the most recent news, right? The recent acquisition you just announced. You touched on it a little bit, but maybe again, why did you do it? Maybe some of the benefits as you see them.
Yeah, good question. So, and we'll report more on this as we move forward. Qorvo Biotech was the subsidiary of Qorvo that was responsible for both the human and human market, and also our segment of the market. And we had an original deal with them, which we then redid in January of this year. And under that agreement, we had substantial payments that we had made, and more so payments that were going to be coming up in the near term. $4 million license payment that would be due probably in the first quarter of next year, another $8 million to get perpetual license, which would be due sometime in the next 10 years, payments for transition services to have their people train our people on how to build these things and so on. And as we heard that they were that Qorvo was willing to divest the company, it just made perfect sense for us to be able to take a look at how much are we going to be paying whoever owns this company, and how much can we acquire it for. And so it made good financial sense for us because we now no longer have to make those payments, obviously, but we also don't have to build out the manufacturing facility in Georgia. We don't have to hire people and train them, pay the Qorvo people to train our people, and the same thing on the R&D front in Ann Arbor. We simply acquired their facility, we acquired their R&D team, we acquired their manufacturing team. And so from a financial standpoint, much better off for us. And also from an operational standpoint, instead of spending the next 6 months getting up and running, we'll spend the next 6 months really fine-tuning and honing the processes. And then finally, we're an animal health focused company, but this also gives us a human health asset, right? The opportunity to, at some point in the future, monetize this human health part of the business, either through a spin out or a divestiture or what have you. This adds to our portfolio, if you will, of human health assets, because our microscope, the TruView microscope, is also, we believe, going to be very well received on the human side once we first build a track record on the animal health side. So good financially in the short term, good financially in the long term, good from a sort of operational standpoint, and then a nice bonus of a potential asset for the future.
Perfect. Thanks for expanding on that. Again, I think we sort of reached the end of the time here. Larry, thank you very much for the presentation today. Again, I want to remind everyone that if you've not already signed up for a one-on-one meeting and would like to do so, shoot me an email, bloom@lythampartners.com, visit the website, lythampartners.com/virtual. There's a one-on-one meeting request button there. Again, Larry, thanks so much for the time. Greatly appreciate it. We hope you all enjoy the conference.
Thank you, Robert. Take care.